Hi, I'm Courtney McQuade with Markets Group here at our 13th Private Equity Forum in New York City. With me is Christine Pope, Managing Director at Oaktree Capital. Christine, it's great to see you.
Nice to meet you.
So you just came off a very big panel session discussing private debt. Can you tell me what some of the key takeaways were?
Sure. Certainly today, everyone's acknowledging the uncertain environment that we're in, and it has caused a delay in some of the M&A activity that everyone thought was going to be more robust starting off this year. I think from our perspective, we are seeing M&A activity, more robust in Europe than in the United States, but it is lower than everyone's expectations. So as a result of that, there's a lot of dry powder that sponsors do need to deploy going forward, but in the meantime, we are seeing them examining their portfolios, making sure they have enough liquidity. So that's creating some opportunities to provide private debt to shore up liquidity in companies. While they hold on to companies for longer, I think it's nearly 50% of companies have been held for over 5 years by sponsors. They are looking at amend and extend transactions, so that's creating opportunities for us across Oaktree in the junior parts of the capital structure when they need to delever some companies that maybe were purchased in 2021 and have a lot of leverage on them. So either pref opportunities, junior debt opportunities, holdco debt, we're seeing rising the asks for.
Wow. And so I guess you covered this a little bit, but how is this craziness in the market and all the questions really shaping investors' appetite for private debt right now?
Sure. So when we look at the volatility that we saw over the last 6 weeks, certainly the equity markets were very volatile. You saw it in the public credit markets too. Yields moved out, I think, at the wides near 460 in April, but they've moved back really this week. And that volatility is something that you don't get as much in private credit. So I think private credit has very attractive yields, and the limited volatility it has versus both, certainly public equity markets, but public credit markets is attractive to investors and good for a portfolio stability.
I always hear everybody talking about private credit. It's been popular for quite some time now.
It is popular. I think it's become an asset class that's here to stay. It's, I think, no longer a question of that. It's nearly 1.8 trillion in size, similar size of the high yield market. And I think one of the questions we get a lot is, are these companies real companies? Well, that is certainly been proven. There are private credit deals that are for $1 billion plus EBITDA companies. We are working cohesively with banks. Sometimes a broadly syndicated solution is shopped at the same time, but sometimes a private credit solution makes more sense for a company, whether it's speed of execution or bespoke features. And oftentimes you're now seeing this year, I think, a trend where a lot of private credit funds are partnering with banks so that they can provide private credit where it's not optimal for a bank to use their balance sheet to do so. We have partnerships with some banks to reach more sourcing opportunities in different parts of the market that we can't reach ourselves. And it's a benefit to the banks to be able to better serve their customers in those ways.
Fantastic. And tell me, Christine, what are you going to be looking at in the next 12 to 18 months as far as private debt goes?
Well, I think right now we are seeing a lot of the really pristine deals moving forward. Again, a lot of companies that aren't being sold maybe have maturities they need to deal with. So there are some amend and extends on the horizon. So that's as far as the sponsor-backed activity. We are seeing more types of private credit. Asset-backed finance is getting a lot of attention in the private credit world, not just for below investment grade ABF, but also for non-rated ABF transactions where borrowers have very solid recurring cash flows, but just for one reason or other don't have ratings. So I think that's a growing part of the private credit market we're going to see over the next 12 to 18 months as well.
Fantastic. Well, Christine, thanks so much for taking the time.
Yeah, nice to meet you, and thank you for having me.
Absolutely. And we are shooting straight from the sidelines of our private equity forum in New York.